The economy has started to crumble, the Fed has just raised the rates, and the threat of a recession is lurking above us. So you might think that right now is the best time to back off, but as Warren Buffett once said, be greedy when others are fearful and be fearful when others are greedy. Today, I will share with you some tips on how to invest in this market and how am I personally doing in those tumultuous times.
Oh my God! Okay, it's happening. Everybody stay calm.
But before to continue, make sure to go in the comment section and let me know where do you think the market is going. Now, you need to keep in mind that when you invest in the stock market, but it can also be in the crypto market or even in the real estate, we all have different objectives, but also some different risk tolerance and also some different time lapse. This is super important to understand that, to be able to understand what are going to be the secrets that I'm about to share with you right now. Now, let's say that you're Brian, 19 years old, that still lives with his parents and that also goes to school, but also have a part-time job. So Brian currently doesn't have any big expenses except its credit card and also its car that he has to pay. Except of that, he loves to go out the Friday nights at the club with his friends, and since he lives in Canada, well, he can in all legality since you can go out at 18 years old over here.
Yeah, baby. Yeah.
Now, Brian has a great advantage and gift that many people would love to have, which is that he has a lot of time ahead of him. But not only that, he doesn't have a lot of expenses yet, so with his part-time job and with his small expenses that he has to pay, he still have a lot of money to be able to invest. On the other hand, you have Janet that is 40 years old that has 3 kids and 3 different jobs to be able to feed its kid. In her case, she barely have enough money to invest, and so her tolerance of risk obviously is way different compared to Brian. But not only that, but she's also way older than Brian, which makes that she just wants to invest in safe investment where she can be sure to stay and have her capital back when she will need it. Especially knowing the fact that she has many different expenses to pay, for example her mortgage, her car, but also her kids to feed. You see here both Janet and Brian all have some different time horizon, but also some risk tolerance and different objectives. So you have Brian on one side that still is at the beginning of his life without any big restriction, and on the other end you have Janet that has a certain age that also need to pay a lot of different bills but also have its kid to feed. And unfortunately, it isn't possible to feed them with Dogecoins. Of course, this will impact the way that both of these individuals will invest. Now, if we take a look at the S&P 500, which is an index that includes the 500 biggest American companies and which also provide a good overview of the global situation on the market, we can clearly see that it's down more than 15% this year. Companies like Microsoft, Apple, Amazon, and Meta are also massively down since the beginning of the year. But is it really the end of the stock market? In fact, except the Japanese market in the 90s, we can see that the market has been consistently pushing through the top throughout the last century. But now we can see that the market has been correcting from its all-time high since more than 3 and 4 months now. But why is the market is currently correcting? So there are many different factors that can explain it. First, you have all the different supply chain problems that affect all the different fields of our economy. You also have the Ukrainian war that affects the global peace, but also that creates some scarcity in all the raw materials. For example, if you want to buy gas for your car, but also if you want to buy some different groceries. But the real danger comes from the high inflation that will force the governments to increase the rates, which will lead to less money being available to be injected in the economy, since less people will have money left after all the expenses that they will have to pay. And of course, this is just like a circle, because things will continue to go higher while people will have less money, and so the stock market will have less liquidity in it, which will make that everything will continue to go down and people will still lose money. After 1.5 years of growth because people were staying at home and had a lot of money to inject in the stock market and in the crypto market, while now we are currently seeing a future recession ahead of it. But in fact, even if the fear of a war and the fear of the inflation will potentially stay during many months and many years now, an intelligent investor could be someone that uses these opportunities to make some big investment at a certain discount. As I told you earlier, the global equation for the rates is that when the rates are going down, well, the price of things is going up, which makes that people have more money to invest and which makes that the economy is going pretty well. When the situation is on the opposite side, so the rates are going up and the price of things is going down, that means that people are losing some buying power. And when the situation are changing, for example, that since the beginning of the pandemic, we've seen that the rates were going down and now they are going up, well, that means that we are in a switch of cycle. Now there are many ways that you could take advantage of it, and we will see that in the next couple of minutes. Personally, I am not a big fan of trying to time the market because it has been proved in the past that it's the worst way to do a lot of return on your investment. Now to illustrate that, let's take an hypothesis situation with 5 different investors. All of these investors will have a different approach to invest in the market. First, you have Peter Perfect, which is a perfect market timer, so he always predict the market perfectly well. So he decided to invest $2,000 in the market every year at his lowest point, and that means that he will also wait until the market goes at his lowest point before to invest. But he always predicted perfectly, which is pretty much impossible. After, you have Ashley Action, which just takes some simple, consistent approach, which means that she invests $2,000 in the market on the first trading day of the year. On the upper end, you have Matthew Monthly that just divides his annual $2,000 in 12 different portions, which represents the 12 different months, and he invests this part each and every single month. You also have Rosie Rotten that has an incredibly poor timing, and she always invests at the bottom of the market, or $2,000 each and every single year. And finally, you have Larry Dinger that decides to keep all his money in cash investment like treasury bills, which means that he doesn't invest at all in the stock market. Here, what we can see on a 20 years period is the fact that the bad timer is able to beat far the one that just keep all his investment in cash. But instead of that, we can see that there are not much differences, for example, with the one that decide to invest immediately and the one with dollar cost averaging. But also the difference between the perfect timer and the bad timer is about $30,000, which is not that much compared to the bad timer and the one that's in cash. This example really believes and helped me with my position that I try to keep as less cash possible, because I believe that there are always some opportunities to invest in places in the stock market, but it can also be in the crypto market if you're more a crypto guy, or maybe in the real estate, as I told you earlier. I believe that the time in the market is better than timing the market. Timing in the market also means that you need to sell your stocks, which will eventually generate some capital gain, which will obviously be taxed at 50% of your gains on your bracket. Don't believe the hypothesis that the government won't take a part of what you have gained. Diversification is also another crucial factor that you need to include in your investment strategy, since you shouldn't rely on only one sector, for example. I personally have the rule to never invest more than 10% in one stock and less than 20% in any sector in my portfolio. Let's say that you decided to invest in 2020 in the tech sector. For 2020 and 2021, you would have a massive gain. However, throughout the end of 2021 and the beginning of 2022, you would have been totally hammered. Unfortunately, on the internet, you have all these fake gurus that tell you to invest in one golden stock that will give you 1000% of return in 1 month on one stock. However, on the long term, the good old ETFs and funds are still the best investment that you can do. Let's say, for example, that you decided to invest each and every single month, since you're not trying to time the market, in an S&P 500 tracker. The best S&P tracker, in my opinion, still is VU. But if you prefer, you could invest also in a total market index, which cover all the market. And in my opinion, the one that is the best comes also from Vanguard, which is with the ticker VTE. Historically, the S&P 500 would give you about roughly 10 to 15% per year of return. The diversification also reduces your volatility by diminishing your systematic risk, which is considered as a diversification risk. It also safeguards you against adverse market cycles, and it exposes you to more opportunities of return, and it minimizes your risk of loss on your overall portfolio. But now, what am I personally doing right now? Well, the answer is pretty simple. I continue to invest each and every single month with consistency in stocks and also in different funds that I have big trust into for the future. As Brian, I am still young. I am not 19 years old. I am 23 years old, but I still live in my mom's basement. I don't have many different expenses, but I do want eventually in the next summer in 2023 to buy my first real estate rental property. Of course, I will need some massive liquidity to be able to make that purchase, but I have many different investments that are working for me at the moment, as you've been able to see in my previous video on that topic. And also, I have recently decided to trim down my position where I had a lot of profit, for example in my bank sectors, but also in my real estate investment trust sector, and also in the oil sector, to don't surpass my 20% ratio that I've told you earlier. And right now I am really focusing highly to invest in different dividend stocks, since they have been historically proven to be resisting way better compared to growth stock, for example during some recession times. And of course, because I don't necessarily know which stocks will be the best to include and to invest right now, what I do is that I also continue to buy some S&P 500 ETF tracker that gives me some great exposure to the US market. And I also buy some high dividend ETFs that will give me some great and super interesting cash flow. And right now, as I told you, it is super crucial for me to develop some great cash flow to be able to pay, for example, for my future real estate. This is why during a recession, I will always prioritize some cash flow over growth, but I will not neglect, for example, if I see some great discount on different stocks of growth, for example, in Meta. In the past couple of months, I've seen a huge decrease in that stock, and I've decided to take some part of it and invest a little bit in that company, with keeping in mind all my different ratios. So as you can see, I am not trying to time the market to see this company is going to outperform the market or this company is not going to do well. I'm just trying to trim down all the positions that I have too much exposure into. So take some profits and also reinvest those profits somewhere else. So I'm not really interested to just keep this cash and do nothing with it. And guys, I hope that you liked that video. If you would like to know what are the 2 best stocks that you can buy at the moment, check out the video that's going to be right over here that talks about it. And for everyone that is new to the channel, I invite you to join the North family by subscribing to the channel for only $0.0. And I will see you soon. Peace.